A big consideration for sellers moving to another property is having to pay higher property tax. Well, the good news is that it is possible to transfer your property tax base to another property, and that's if you meet certain criteria. Now, let's face it, nobody likes to pay higher property taxes. I mean, I would say most people's reaction to having to pay higher property taxes is actually very similar.
Hate, 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 double hate.
Loathe entirely.
The good news is that Prop 19 may allow you to transfer your property tax base of your principal residence to the next property you acquire. And by the end of the video, I'll show you how to easily calculate your property tax base and how to file it for a future purchase. Hi, I'm Harold Powell, a local real estate agent in Ventura, California. Thanks again for checking out our latest video. And if you're new to the channel and are interested in all things real estate for Ventura, then I suggest hitting the subscribe and the bell icon to be notified of future content. So let's back up the truck a little bit before Prop 19, which came into effect, April 2021. We had Proposition 60 and Proposition 90, which were in effect. And here's what you had. Principal resident owners that are 55 years or older or severe or permanently disabled could apply to a transfer of their property tax basis if they met 4 criteria. Number 1, you could take advantage one time and one time only. Number 2, the home that you were switching the property taxes basis to had to be in the same county, or it had to be in a county that reciprocates. And not every county reciprocated, which could be a problem. Number 3, the new property had to be of equal or lesser value. And the 4th criteria, this all had to be completed within 2 years of selling the original property. Fast forward to the implementation of Prop 19. Now you have sellers that have a lot more wiggle room and flexibility to take their original primary residence and their tax basis with them to a new home. All right, so what's happening under the new regulations for Prop 19? Well, it's still for homeowners, principal residents that are 55 years or older, or permanently or severely disabled. And the one new wrinkle is if your home was destroyed in a wildfire, you can transfer the property tax from that original primary residence. So here are the 3 big changes that you need to know regarding transferring of the tax assessed value of the current principal residence. Change number 1, it can happen anywhere in the state of California. Remember before, it was only reciprocating counties. Change number 2, and this one's huge. The transfer actually can take place regardless of value. If you buy a home of even greater value than your current home, there is a calculation to determine what the tax assessed value will be on your new home, even though it may be a little bit higher. I actually will show you how to calculate this using the Prop 19 calculator, which I will have in the link in the description below so you can access that. And finally, number 3, this can be done up to 3 times. If you've used Prop 90 previously, now you can use Prop 19 for future transfers. I know, pretty amazing, right? So if you buy a property that is equal or lesser in sales price, then your current assessed value will be transferred over to the new purchase anywhere in the state of California. So let's go to the Prop 19 calculator so you can see just how easily it is. You can calculate the tax assessed value of a new purchase that is higher in price than your current primary residence. Let's go. Okay, so in this example, I'm just going to fill out the 3 boxes here. And in this example, we're going to, again, buy up in purchase price. So we're going to start off by inputting the current residence assessed value on the tax rolls. In this case, I'm going to use $500,000. Okay, and you can find that if you're not sure. You can go online to your Ventura County Tax Collector site, go online, and you can look it up that way. The next box here, primary residence sale price. So this, let's say we're selling the current residence for $1.4 million in this case. Okay. And then the replacement primary residence of the new home purchase, we're buying up. So we're going to buy this next one's going to be $2 million. So what it does now, it calculates if you didn't have Prop 19, you'd be paying $24,000. And this is the difference between your primary and replacement residence number. Again, this is the calculation. I'm not going to go into detail, but it calculates estimated taxable value of new home if you do this within the first year. So from day 0 to 365, this is going to be your new taxable value. And then with Prop 19, this is what the property tax is going to be. It'd be $12,360 versus $24,000. Wow. You save nearly $12,000, nearly double is the savings. So huge from that standpoint. Down here is this if you elect to buy it in year 2, it's a little bit less on your taxable value as well as your property tax as well. That's it. So now that you know how to calculate the assessed value, the whole process has to take place within, again, 2 years of selling your home, which is the same as before. One side note is that if you end up purchasing the primary replacement before selling the current residence, then the assessor will just use 100% of the sale price rather than, again, 105, which is how the calculation is done. All right, so here's what you need to know if you plan on doing this. Number 1, set up for the transfer does not take place in the escrow. You need to have both the primary sold and the new house purchased. Then you're going to go ahead and file the new property tax in the county that you are purchasing in so that it'll to actually be in effect. So number 2 then is you need to know where you file your Prop 19 base year values that are filed. You can actually find the paperwork online at the county tax assessor's office where you purchase the primary replacement property. I'll include the link for filing Prop 19 forms for Ventura County Tax Assessor in the description below, so it'll be easy for you if you're in this county. Now, if you're in the unique circumstance where you're actually going to purchase that end result property before you sell the original primary residence, you can absolutely do that. You just need to sell the original primary residence within 2 years of purchasing the final destination home. The good news is there's no time limit on which you had to occupy the original primary residence. It is just needed to be your primary residence. That's it. Now, if there's a question about this, I recommend checking with your CPA just to make sure that it is qualified as a primary residence. So long as that's true, you can apply for the Prop 19 transfer. Now, if you're thinking of moving, I recommend you watch the Get Your Home Ready to Sell checklist video next. Otherwise, if you have specific questions, you can call or text me at 805-340-1032.